Welcome into the Crypto Bunker podcast. Today, just wanted to cover quickly what we're seeing in markets. Today we had a large rally in the stock market, and tonight we are seeing a massive dump in technology stocks. We did have Microsoft and Google report earnings today, which were both misses, I believe, and we can see that the last couple weeks we've had a nice rally, and that has been fully erased from the market. And so we have Microsoft, obviously, this candle that people maybe thought was the bottom. We had a rally, and then we had a hard rejection, which did come in right at resistance there. And so it makes sense in terms of the chart. And um, it makes sense in terms of the earnings as well, but we saw that we caught support in a lot of different names, including Ethereum, S&P 500, Microsoft at the 200-week moving average. But what I wanted to, what I can talk about and multiple different things, and but when we look at the moving averages, okay, and I've talked about this before, but remember when I was calling the top up here, I was saying, look how wide the moving averages are, right? And we do see that we have consolidated those moving averages. But when is the consolidation enough? And as we can see in 2020, we actually didn't even have any crosses. This thing just went straight down and then straight all the way up. We've now had a cross here, and we could eventually we'll see all of these cross, in my opinion, in a longer bear market. And the reason I say that is because if we look back to 2008, we can see that the bottom was marked by the cross of the 150 and the 200. And we did see the 200 moving average on top here, right? So it's the opposite of what we've seen this entire bull market, which has been the order of 20-week, 100-week, 150-week, and 200-week. But when it was time to buy in 2008, or 2009, I should say, was actually when the 150 crossed the 200 and the 200 was on top. Okay. Right now, the 200 is still on the bottom, which just shows you how long we have to go, in my opinion. And we can look at Ethereum next, because I know a lot of you guys probably saw the Ethereum pump today. So I do want to cover Ethereum, but this is just an example of, again, 200 week on top. This was a younger, but as we can see, we're wide and we're in order here, just like the top recently. And just like now, essentially where we're at is, around this point, probably where we're like getting a final capitulation and then a sideways motion, potentially down again. And it actually made a lower low in 2009, which is interesting. And so, I mean, imagine being an Ethereum or a Microsoft bull, and you just are so bullish on Microsoft, but you have to wait 13 years for this. I mean, this is sideways accumulation. And I mean, imagine just being in this and thinking, I mean, it's over essentially, and not really paying attention. And then all of a sudden, bam, we just get a massive, I mean, this thing, it doesn't even look like anything now. And so we have to consider this in what we're looking at today. And so we will lose this 200 week, in my opinion, because we caught it as support, and now we're almost already going to go back to it just on after hours here. Yeah, so let's look at Ethereum here. Obviously, Ethereum had a massive short squeeze today, but it's probably going to close, in my opinion, below the 20-week moving average. And we did have a death cross of the 100-week crossing the 150. And we obviously used the 200-week as support. on the SMA, but it just shows how fast I think we've come down. Just the fact that the 20 week is going to cross the 200 this soon. But again, we're still very wide here because this was such a bubble, basically. It just happened so quickly, and now it's going to come back so quickly. And as you can see, one of my target areas is in this $430 range. That's when you want to think about putting, a lot of money to work. But it could end up like Microsoft, where it's just bouncing between 430 and 1700 for, what if that happened? What if it was 10 years? What would you do? Would you continue to accumulate Ethereum, or what would your plan be? That's what you have to start figuring out. And as we can see, once again, there was no 200 week back then because it was such a young asset, but we do see the 150 week on top. Okay. And that's, again, this was kind of when you wanted to buy. And then, when they get skinny is really when you definitely want to buy again. See how they're all in this little tiny range here of the 200, the 150, the 100. And then they crossed bullish. And that's when you buy. They crossed bullish. And if you were buying through this whole period here, right here, where when they crossed bullish here, the 20 went over the 200 and the 100, and it just kept going. And then that was it. That was the moment. And it actually caught the 20 week as support, even as at June of 2020 when I was buying. It caught the 20 as support here, and that's what you want to see. You want to see it break the 20 week moving average and then catch it as support, just like it did here. And I'll be honest, we could be in a, I don't think now that we see the tech earnings report, I don't think we're going to be seeing much more of a rally here. But if we did, we could look for support on the 20 and then a rally up to the 150, just like in that last bear market, which the 150 right now is around 2,400. And, the crazy thing is the 150 is still going up, which just shows you, again, the 200 going up still, which just shows how long it takes here to really break the back of these moving averages. And, it's just a tough time. And I think that it's sad actually, because, a lot of people, and I'm not saying, sell your ETH or anything like that. And none of this is financial advice, obviously, that I don't ever give that type of information. But, and we're going to cover gold and silver next as well, if anyone's waiting for that. But what I want to say last thing about Ethereum is that I am bullish over the long term. Okay. Just because I think it's going to go to 400 doesn't mean I don't think it's going to go to 15,000. Okay. So eventually I do think we'll be 10x higher than where we're at right now. But it might take a while because I think this was crypto's .com bust. I think that it depends on what stock you're looking at to compare it to, but Microsoft went sideways for 13 years. Amazon actually made this lower low here in their chart, which we can quickly look at because I compared it to Polkadot chart, which I still think is like totally accurate. It's like the same exact chart. It's almost the same values, which is crazy. And what happened was it basically made one lower low here. And so it kind of chopped here, kind of like where we're at now. It got rejected by the 20, or it went above it and then it failed. But it made one lower low, more lower low. And then it just went up only, really. And it never made another lower low. It just kind of continued to consolidate upwards like this and this trajectory from the bottom perfectly, actually, which is really cool to see. And so I do think some charts could look like this. I don't know for sure. It really depends on regulations too with crypto. I mean, we just don't know what we're going to get right now. And that's why it's risky. And that's why, just accumulate small amounts, when you have the extra money. but realize that if you're not in a secure position right now, this could be a bad recession. People could lose their jobs, house values will collapse, all of those things. And so just keep that in mind. One of the reasons today, we rallied was, excuse me here. I apologize for that. Was the 2-year and really rates in general going down. But they actually did get picked back up. And so, this does look like a topping candle, but so did this, right? So did this down here in June. We consolidated sideways. We ended up on the 20-week as support, and then we blasted higher. So if the 20-week here continues to move up like this, who knows? We could see a sideways consolidation like this, and then we kind of run, and it's like a bull flag, and then we run up again potentially like that. So just be aware of rates. Obviously, this is, again, I think one of the main reasons that Ethereum pumped today was rates going down sort of significantly intraday. You can see that here on the 10-year, and the 10-year usually is a good tracker of ETH. It's kind of like the opposite of what ETH will do. And it's obviously been up only, and that's really why it's actually crazy that crypto has held up this well in this environment here. And we'll see what happens. But gold and silver, I do believe, are bottoming, and I will say that I do believe that they have bottomed. I know that's somewhat controversial. We can take these off for now. But I just think that what we're seeing here below the 200, it's a time to accumulate. I mean, people said, they would say, oh, below the 200, that's weak. But we haven't really visited that region since down here, where we were below the 200. And that was obviously the time to buy. People could say, oh, we're in this region where we're going to go through like a massive bear market in gold. I just don't see that. Supply is not coming onto the market. And really, if you look at the COMEX deliveries, essentially they are, they're very bullish right now. And basically what it means is that people are buying hand over fist. We have the proof of that. Today, gold withdrawals hit 11 million ounces. Registered contracts are the lowest since June 2nd, 2020. And so we can look back to that time as well, which is around here when gold was being taken off of the exchanges at record amounts, really around the same price as we are at now. And we also have silver, which is at the lowest level in the COMEX since June 29th, 2017. And so that is back again. This is, around this region, when that was happening, really around here. And we saw a massive spike, even in a bear market, we saw that massive spike. And last time we were again below the 200, and was here. I mean, it doesn't happen often. Obviously, it happened here once again in this bear market, but I don't think that's happening. I mean, we can see we're catching support at this key level here of 18, and even just dating back, we can see that was a high here, support here, resistance. It would have to flip as support here, and I do think that that's what we're getting. And so, yeah, I mean, I think that this is a strong case to be made right now, especially with the premiums on silver. I mean, you can just see that people are buying it hand over fist. And really, this is because they know that eventually rates will come down. And the thing is that rates will come down eventually, because the economy is so bad. And so that will be really good for gold and silver, specifically gold, but silver has been acting more like a monetary metal than an industrial metal for the past couple of years, even though it is needed in industry. And you can even see, like, if you look at some of these solar stocks, um, like First Solar, that we're like at all-time highs for these stocks almost. Not, I mean, in the past like 10 years or something. Um, and so, to me, that shows me that there's a massive demand for solar panels, which need silver. And so, these solar companies are part of the issue and part of the people who are taking all of this silver off of the COMEX right now. So if you look at that, I mean, we can also look at GDX, because this is a good investment vehicle for people who don't want to store physical gold and they don't want to buy paper gold, which I don't recommend. But I do recommend, well, again, none of the stuff is recommendations, and excuse my crazy drawings here. But what I see here, to be honest, is a trend line that has been hit. As you can see there, and you can really look at it there sort of and say, okay, but if you look at it through there, um, if we try to do like, okay, the most touch points, it is support. Since 2015, we can say that this did help hold support once, twice, three, and this would be the fourth time. Um, these are the gold miners, and basically the top, gold miners in the industry will be part of GDX. And I just think that what we're looking at here is, again, we have another trend line that probably was hit there. And obviously we have this trend line. So it's sort of like a channel. So we're kind of in this channel, and once we break free of this channel and we break this $30 level again, I do see an upside for GDX with, gold catching that upside as well. I do think that what we could see in gold is something similar to, again, what happened in 2008, because this is similar. It even could be at a greater clip, because I think that, um, I mean, everything's a mirror, right? And if you look at the economy, gold should be a reflection of the economy. And if gold is, going up, that usually means the economy's sort of in trouble. It also is sensitive to rates. So when rates go down, gold will go up, especially in a bad economy when there's nowhere really else to run. Yeah, I mean, and so what I'm looking at here and what I can say is basically a bull run since 2000. And if we take, that and we sort of use that as a trend line, we could say, okay, maybe we'll catch support down here at 1500. I'm cool with that, continuing to accumulate. But yeah, I mean, you could sort of look at it, even if you use this as the trend line, that, because it caught the 2020 low, that does come into support, and that's potentially where we caught support. We also have this trend line coming in here, which I noticed, catching support here, resistance, resistance, support. So I am noticing that, and I will draw a fib extension for you guys. Start of the bull run to there, and then we look at where we could end up, because if we follow that trend line and we use the bottom there, we're looking at $3,800 gold for the 1618 retracement, and 2,400 for the 786 retracement. So, and obviously the 2,100 is the resistance that we caught here twice. So I do think it's relevant because we did catch that resistance here, and you can just see that the trends line up in different places on the chart. And so, yeah, I mean, and then outperformance obviously would be up here at 8,423. I don't really expect that, but you know, you never know, honestly. I mean, if gold traded totally freely with no paper contracts, it would be that. It would be 8,000. It would be 15 or 20,000. So I think that, you know, if you don't hold any physical metal, that's definitely something you should look into. Um, it's not going to be worth anything if it's just, you know, if you're just holding it as a paper contract like GLD or, you know, Sprott physical gold, unless you have enough of it or you can actually take delivery. Um, but again, I just think that eventually this system will break for the COMEX, and it seems closer than ever. And they really are going to have to let the price run here. I think in November, especially with the election, there's a lot of uncertainty happening in the world. And I do believe that gold and silver will outperform most things for the next 6 months or so. And then we can talk about maybe stocks and crypto, you know, having a good buying position maybe in the next 3 to 6 months if things play out similarly to '08 and '09, where gold and silver actually bottomed 6 months previous or prior to the stock market. So that's it for me. Hopefully you guys got something out of the video. If you did, please like, please leave a comment, please subscribe to the channel, and have a great rest of your evening.